Hello and welcome to Pro Trader Strategies Market Commentary for Friday, December the 6th. It's Unenjoyment Friday. My name's Eric Wilkinson, and yes, you may very well recognize me from mainstream media as the Wolfman. I'm here to not only talk about the economic data and how that impacts the overall market, but how we're implementing options into our portfolios. I'm also doing webinars where I really drill down on rules and things in and around that I can't really have the time, or I just don't have the time to cover here in these daily market commentaries. But without further ado, let's get it on with the economic data that we got today. Let's talk across the pond. We did get German industrial production. Came in at negative 1.7%, expected to be a positive 0.1%. Not very good over there across the pond. We've seen their manufacturing numbers really kind of show recessionary traits. So that not looking too good. We also got Italian retail sales coming in at negative 0.2%, expected to be a positive 0.5%, and they revised last month's number down by 0.1%. So overseas, picture not looking too good. We still have the OPEC meetings going on all day today. We're seeing a bit of a pop here today. I was expecting to see some more weakness based on those OPEC meetings, but we got our unemployment number here in the United States, the major unemployment number, non-farm payrolls. We used to call it Unenjoyment Friday on the floor. But we got hourly average earnings coming off just a bit than what was expected at 0.2%. It's still actually increasing because it's 0.2%, just not as good as what we were expecting. They did revise last month's number up nicely by 0.2%. So maybe making up for that miss on the headline number. But our non-farm payrolls, that's how many people got hired. That was 266,000, expected to be 181,000. So knocking it out of the park quite literally, and revising last month's number up by almost 30,000. So great unemployment numbers today. A lot of people are saying some of that, about 40,000 of those are due to the strikes from GM coming back online, but still a major beat on the number through healthcare and education was doing really well as well. So those numbers were very surprising. And then we also got basically a 50-year low in the unemployment rate coming in at 3.5%, expected to be 3.6%. So most people have not ever seen an unemployment rate that low. University of Michigan consumer sentiment coming in at 99.2, expected to be 97.0, and revised last month's number up by 1%, or by 1 point from 95.7 to 96.8. Wholesale inventories came off a little bit, and that's a little bit of a weird number, but it did come off. That means manufacturers are moving inventory. We really want to see how the manufacturing is ramping up and still moving that inventory rather than pulling back and moving that inventory. And inflation expectations in line at 2.4%. So this economic data point, the non-farm payrolls, really knocking it out of the park. Don't think we're going to see those equities dip back down and test like 3,000 in E-mini S&Ps, at least not anytime soon. With that kind of number, we should see basically stocks across the board start to look to rally here. And that kind of number really is what I think is driving the crude oil number here. We're seeing a pop here, tested $60 this morning. You can see it tested that value area high that we've been talking about. That's going to act as resistance. It just went up there, kissed it, and came back off. Right here, we got the value area high, which lines up with $60, as you can see there. That is going to be resistance as the market comes up there. We don't want to see crude oil moving that high, despite the fact that we are in a trend channel moving higher. You know, one could easily see, if we start seeing really good economic data and good sales coming out of this Christmas holiday, that this market could continue to move up into that 60 handle. I want to see crude oil a little lower to allow that velocity of money to go on and not crimp spending, especially heading into the holiday season, if you want the economy to do well. Obviously, gold coming off. We're looking like that 1,500 is not going to happen anytime soon. Market coming back down into the mid 1400s. Now we're starting to build up a bit of a volume node right here at 1460, as you can see. That's where the market's come back down to. We could see it get a little bit complacent, maybe even lose a little bit of strength here as people are pulling money out of the safe haven of the precious metals and putting that to work in a little bit more risky assets, which would be the equities, and tech sector doing very well today on top of it. Now, that being said, we've also lost that 160 handle in the bonds. I mean, we've lost it for a couple of days. It does not look like we are going to go back to and revisit that anytime soon, especially with the this kind of data. We could actually see some more weakness and yields start to creep higher. So if you're thinking about buying a home, you probably should be getting off your rocker and doing that before rates start moving higher in the long tail of the curve. All right, VIX is coming off. It probably will lose its teens, as well as we're seeing a massive rally in the equities. Dow Jones Industrial Averages on its highs right now at 331 points right now, back up into that 2800 handle. That is just a sign of good economic data. We should see a lot of push, people going in there and buying equities today throughout the day. I don't know that we'll see much weakness, and definitely would not see it go revisit those lows. We got the NASDAQ up 85 points right now, again on the highs. We'll see that again here in the E-mini S&Ps, and even more so when we break it down into the 30-minute chart. But E-mini S&Ps on the highs, testing $32. We could easily see next week for sure these all-time highs on a daily basis almost. But I mean, unless we get some kind of really bad news, which I don't think we will. The tariffs don't seem to be hurting anybody, obviously, with the economic data. So the heck with China, right? We want to keep our intellectual property. All right, breakdown of the E-mini S&Ps. This is a 30-minute chart. As you can see here, this is when the economic data was released. It's before the open of the equities, but a massive rally right off the bat and almost no pullback. Nobody is thinking that they have bought the highs, it looks like, here today. So the market may get a bit of a correction. Don't get me wrong. We may see some red candles, but I do not see us coming back down into the lower 31s, at least like where we opened for that in and around the non-farm payrolls, the overnight lows anyway. So the market really making a move higher. Now, with yesterday's webinar, I was talking about putting on a trade. I was trying to decide whether or not I was going to go with Disney or Procter & Gamble. Well, I think the best upside here would be with Disney. They've got the new streaming with the hourly average earnings increasing, the unemployment rate at all-time lows. That means people are working, right? That means that we'll be spending money that will drive the economy. That being said, I think that Disney stands a better chance of a higher move than what we would see with Procter & Gamble, especially with this pullback coming down and testing that 147 area, which is going to act as support. We've seen it time and time again. I think that we're going to actually see Disney start to move higher. So with that being said, I went into the Disney trade and went far out on the curve, not quite as far out as I was talking on the daily market commentaries, because I wanted to get a little bit better pricing and I didn't want to pay up too much for it. So I actually went into the April and I bought the 145 calls in there and then sold the 145 puts. And I did that for a debit of $3.05. So you can look at this right now. It looks like it's probably a little bit underwater by about a nickel, maybe a dime here. But what we do is we take those 145 calls and add it because it was a debit to that. So my break even on this is 148.05. All right. So that is where basically I bought Disney. I'm looking for it obviously to move higher. If it starts to move lower, I'm going to show you how throughout these webinars and daily market commentaries, how we stay mechanical with that kind of trade and try and lower our basis on it. So with that being said, that's all I've done right now. The rest of my portfolio is doing rather well. We've got Disney coming off just a little bit right now, but I'm not too worried about that. Apache almost back to break even after that big sell-off that we saw there. McDonald's making a move higher here as well, trying to test this 195 handle. I hope to see that break above there, settle above that Fibonacci, which is the 23 right here. I want to see a settlement above that. Right now, just below it by a dime. So a move higher, you know, this is the point of control here. So that is going to act as a bit of a magnet and kind of hold it in and around this area. But if we can get above that Fibonacci, it's going to look like we're going to be able to make a bit of a move higher. Again, this economic data point with the non-farm payrolls should give investors a bit more confidence in McDonald's. You know, that is where people's spending habits for out to eat usually are breakfast and especially lunch. Not so much dinner, but lunch for sure. And with this many people working, that should help drive the bottom line higher for McDonald's. So I'm not too concerned about that trade as well. So I'm going to ride that one out for a little bit longer. I do have on the short 185 puts with that trade. Remember, I did the D's, sold the 185 puts in there for about $1. It's trading for 15 cents right now, so I'm going to probably look to cover that with this move higher, volatility coming out. Probably should have done that before the daily market commentary, but I'm going to cover those short puts today. And, you know, again, if we get a bit of a pullback again, I'll add to it. This is the second time that I've sold those 185 puts and covered those for a profit anytime there's a pullback in McDonald's. So that's all I've done today. I'm going to be looking to take off that McDonald's trade later on and put on that Disney trade as we talked about in the daily market or in that webinar yesterday on the synthetic long put or synthetic long stock. Gosh, all right, mouthful today. Tried to get all that out for you a little bit early. If you haven't seen that webinar in the synthetic long stock, check it out because it is a great return on capital. You will put up much less margin using options. You get the same type of directional positivity in your P&L. Remember, I built this out, or if you watch that webinar, you will see I built that out. So I have 100 deltas. So for every dollar move higher in Disney, I gain $1 in my account, right? So that's all I've got. Hope everybody has a great weekend. And if you can't take that, take it easy.